Hello, welcome back. The bond trick, how the U.S. buys its own debt. Here's something that sounds like financial sorcery. The United States government borrows trillions of dollars from itself. Imagine owing money, writing an IOU, and then sticking it in your own drawer to pay yourself interest later. Absurd? Maybe. But this trick is at the heart of how the U.S. economy functions, and it has created one of the most powerful financial systems in history. To understand how we got here, we need to go back to the birth of the American Republic. In 1790, the fledgling U.S. was drowning in Revolutionary War debt, over $75 million, an enormous figure for the time. Alexander Hamilton, the country's first Treasury Secretary, had an audacious idea: consolidate the debt into bonds backed by the federal government. Instead of defaulting, America would pay interest regularly and own trust. It worked. By turning debt into a commodity, Hamilton planted the seed of the Treasury market that would one day dominate global finance. Fast forward to the 20th century, when the U.S. truly mastered the bond game. Wars were the great accelerators. World War I and II required staggering sums of money, and Washington issued Liberty bonds and war bonds, marketing them to patriotic Americans as a way to support the troops. By 1945, about 85 million Americans, two-thirds of the population, held war bonds. It wasn't just financing, it was nation-building. But the real twist came after World War II. The Federal Reserve, America's central bank, became more than just a manager of interest rates. It became the government's own secret lender. When the U.S. issues Treasury bonds, it sells them to the public, foreign governments, or institutions. But what happens when demand falls short, when fewer buyers show up? That's where the Fed steps in. It buys treasuries on the open market, using money it essentially creates out of thin air. In effect, the U.S. government borrows money, and its central bank conjures up dollars to buy that debt. This loop: government issues debt, the Fed buys it, government pays interest, and the cycle continues, has fueled America's rise. It financed highways, moon landings, social programs, wars in Korea, Vietnam, Iraq, and Afghanistan. By the 21st century, U.S. treasuries weren't just bonds. They were the safest, most liquid asset in the world. China, Japan, Saudi Arabia, and countless global banks hoarded them like treasure. Owning treasuries meant owning a slice of the American promise: stability, strength, and guaranteed payment. But here's where things get controversial. Critics argue this system is just a sophisticated Ponzi scheme. By 2025, U.S. national debt has ballooned past $34 trillion, more than the entire GDP. Every year, hundreds of billions go just to paying interest, not reducing the principal. And since the Fed often buys treasuries by creating new money, skeptics warn it risks devaluing the dollar and fueling inflation. Remember 2021 to 2022? Inflation hit a 40-year high, and many blamed excessive bond buying during the pandemic. Yet, the alternative is scarier. Imagine if America stopped issuing debt. Government shutdowns would become permanent. Social security checks might bounce. Soldiers wouldn't get paid. The dollar could collapse. Treasuries are the backbone not only of the U.S. economy but of the global financial system. Banks use them as collateral. Countries store them as reserves, and investors rely on them as safe havens in crises. In short, without the bond trick, the world's financial order could unravel. Some moments stand out like warning flares. In 2011, a debt ceiling standoff nearly caused the U.S. to default for the first time. Standard & Poor's downgraded America's credit rating, shaking markets. In 2020, during the COVID-19 pandemic, the Fed bought more than $3 trillion in treasuries within months, pumping liquidity into a panicked system. Each time, the bond market didn't just reflect American power, it determined it. What's fascinating is how ordinary this extraordinary system has become. Politicians debate taxes and spending, but rarely question the deeper mechanism that makes it all possible. The bond trick is hidden in plain sight, humming along in the background, too complex for most citizens to fully grasp, too vital to openly challenge. The legacy of this financial architecture is double-edged. On one hand, it has allowed the U.S. to build, fight, innovate, and dominate for centuries. It turned a scrappy post-revolutionary nation into the world's financial empire. On the other hand, It has trapped America in a cycle of endless borrowing, where tomorrow's prosperity is always leveraged against today's promises. So, what can we learn from it? Perhaps that power often lies not in armies or speeches, but in the invisible contracts that bind trust and obligation. America mastered the art of making debt look like strength, and in doing so, it built the world's deepest reservoir of confidence. But confidence is fragile. If investors ever lose faith in treasuries, the empire of debt could crumble as swiftly as it rose. And that, I think, is the lesson. Debt is not just a number, it's a story people believe in. As long as the world keeps believing in the U.S. bond trick, the machine keeps running. But history has shown us, from Rome to the South Sea bubble, that no story lasts forever. If you enjoyed this story, leave a banknote with $sign in the comments.